Watch the breakdown.
What's going on, you guys? It's a young investor here, back with you with another video. This week, we're going over something that's very famous in the stock market. It's something called the PDT rule. It stands for the pattern day trading rule. This rule applies to anybody that have less than $25,000 in their account. If you have less than $25,000 in your account, you cannot place more than 3 day trades per week. All right, if you place more than 3 day trades per week, your broker is forced by the government to restrict your account for about 90 days on day trading. You will still be able to swing trade, I believe, but you will not be able to day trade until that 90 days is up. All right, let's get into it. All right, first off, that's basically what the PDT rule is. You gotta have more than $25,000 in your account because the government look at you as a puppy and they're trying to stop you from blowing your account. They don't think you can manage more than $25,000 because you don't have that in your broker account. So they're stopping your broker from letting you trade more than 3 times a week if you don't have more than 25 grand. As far as day trading, you can swing trade your ass off. You can buy main stocks one day and sell it the next day. All right, but as far as day trading, you cannot place more than 3 day trades a week. All right. So basically, what are some ways to get around this? What are some ways to get around this if you don't have more than 25 grand in your account and you want to trade every day, even though you're under the PDT rule? Let's think very hard. One way I can say is you can definitely use brokers that is offshore. Offshore brokers. You might say, what is an offshore broker? I don't know either. I didn't know what it was either. What is an offshore broker? Okay, an offshore broker is a broker that's basically not on the U.S. grounds. Not on the U.S. grounds, which means they don't gotta follow by the U.S. rules, which means they can let you place more than 3 day trades per week. What is one of them? One of them that is very famous upon the stock market and traders is something that's called Short Trader. I was about to open an account with them, but I just stopped. Somebody told me don't open with it when I seen that there was a bunch of fees and as far as using their platform and stuff like that. I just stopped it, especially y'all start with a little bit of money. So Short Trader, that's one that you can research on your own. You do your own due diligence and actually find out if it's worth it or not. Another one too would be one that I actually have experience with. It's a more so of a platform, basically an app. It's called UStockTrade. UStockTrade is actually an amazing platform if you want to start off and actually day trade more than 3 days per week. It's peer-to-peer trade, and your money is actually instantly given to you once you sell your stocks to the peer-to-peers, which means peer-to-peer you don't got to go through a broker to actually execute your trades. It's through the platform. You're going direct to somebody, buying their shares off them. I thought it would be very hard doing this because who's actually going to act all the time, right? To sell their shares. But the app is actually very good, and you actually can buy shares like this and sell shares in the snap of a damn finger. So this is very good. UStockTrade was a very good platform. All right, let me get you guys into the details of UStockTrade. UStockTrade is $1 per commission. It's very cheap, lower than anywhere I've ever seen. It's also $1 a month platform fees and monthly fees, basically $1 a month monthly fees. So that's not bad if you want to get started on UStockTrade. I give them a 9.9. All right. Now let's get to the third one. The third one is TradeNet. TradeNet is a platform or basically a broker that's also offshore of the U.S. territory that allow you to place more than 3 day trades a week as well. All right. The only thing that you need to know about TradeNet is they fund you money. They fund you money, but you gotta actually have money to open them account. I believe it's about $500 for the basic intro package. They fund you $14,000. You can make up to 1 million trades per day. The only thing with TradeNet is a lot of penny stocks that you want to trade are now restricted. The only thing is because if you trade in penny stocks now, it make it very risky. And TradeNet don't like risky trades. So you guys, a lot of penny stocks are restricted. Only a lot of major, big companies are allowed it. It might be a small amount of penny stocks that they might allow you to trade, but the ones that pop to 100% a day or whatever, they're not going to be on there. I believe they gotta have more than 5 million volume for a whole 3 months per day to be able for you to trade. So penny stock might not have that. All right, and the good thing with trading that is you get about for the intro packet is $500. I believe they got a lot of discounts. You can find it somewhere. Also, the good thing is it's about $500, but they give you a $700 stop loss. So keep that in mind. You got a $700 stop loss, so you got to go into every trade with a plan. All right, so basically there are the brokers that I have suggested for you guys. So what are some techniques or ways basically to get around it? If you want to use your same little account and Robinhood or a broker that you already have, T Ameritrade, Charlotte Web or anything like that. All right, a way around this would be to make a cash account. A cash account, basically, the only thing that's restricted on the PDT rule is a margin account. So if you actually have a cash account, you're basically waiting for your cash to settle. That's the only bad thing about it. You're waiting for your cash to settle, and compared to a margin account, you can actually use money that's for you to trade with instantly. Compared to a cash account, you gotta wait about 3 days for your money to settle, so to make another trade. That's the only thing. With a cash account, all right, the ways that people use that is, since it takes forever for the money to clear, they split their money up. They split it up into small portions. Take trades with small portions of money, and so because you can run out of capital. That's the only bad thing as well. You can run out of capital because you're waiting for it to clear. And so people take small portions of their money, just place day trades throughout the whole week, and that can be a bad effect, a disadvantage when you got to use less of your capital instead of all your capital per trade. So that's the only bad thing as well. All right. Other than the cash account, what else can you use? Another strategy, you could just place them 3 day trades per week. You place them 3 day trades per week, but split it up through the week, one a day, 1 out of the 5 day period, Monday to Friday. Split it up, and you can also swing trade. You can place a million swing trades a day, buy stocks and sell it the next day. So that's very good. You can actually swing trade. So if you wanted to use this technique, you could swing trade the whole week on a small portion of your capital, and you could day trade the other 3 days. You can split it up or trade all the 3 day trades within that day. For that week, that could be a strategy for you. All right, take your 3 day trades, but swing trade your ass off and take calculated trades with risk management. More reward based upon to your risk, and that could be calculated very good, and make sure that you come out successfully on your trade. So yeah, I'm the Young Investor. This is about the PDT rule. Let me know if this was helpful. Comment below, like, subscribe. I'm out. Have a good day.